I've finally finished this video that I've been working on for a long time after many hours of research, writing, and editing. How do I locate monthly dividend stocks is one of the most often asked questions I get. They're by far the most appealing type of investment for people who want to live off of dividends. Therefore, I've been trying to build a resource for people who want to know which stocks are now paying monthly dividends, which is exactly what this video is about. Before we begin, there are a few caveats. This list only contains monthly paying common stocks. It does not include preferred stocks or other publicly listed instruments such as exchange-traded funds or exchange-traded notes. This list is meant to serve as a guide, not an in-depth examination of one company. Going into great detail on each and every company on this list would take far too much time for a single video. Before investing in any of these firms, make sure you do your homework. We're just going to spend about a minute on each company because we have approximately 30 to look at. I'm not going to try to make it too dull because most of these companies are in the finance or real estate industries. But there are a few standouts in aviation, farming, and water recycling. Everything in this video is current as of the time of production, but firms can change their dividend distributions from monthly to quarterly at any time. So if you're watching this video 6 months or so after it was posted, double check to see if the company is still paying monthly dividends. During the pandemic, about 5 or 6 companies switched from paying monthly to quarterly dividends. So this list is shorter than if I had made it a year ago. Finally, for this list, I'm going to go in alphabetical order. So these stocks aren't ranked in any way based on dividend yield, performance, or my personal favorites. This video took a long time to study and put together, so I hope I don't forget anyone. But if I did, please let me know in the comments section down below. But first, let me welcome you at the Smart Stocks Academy channel. To be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it. Now let's get to the video. Agree Realty Corporation is a publicly traded real estate investment trust that focuses on the purchase and development of properties that are leased to industry-leading retail tenants on a net lease basis. The corporation owns and operates a portfolio of 1,404 properties in 47 states as of April 2022. As you can see, they own properties for a number of well-known companies. And in January of 2021, Agree Realty made the changeover from quarterly to monthly dividends. As of this recording, they have been able to increase their dividends for the past 9 years, and they now have a dividend yield of 3.81%. Their most recent dividend was approximately 23 cents per share. In the United States, Agnc Investment Corporation is a mortgage real estate investment trust. Residential mortgage pass-through securities and collateralized mortgage obligations for which the principal and interest payments are guaranteed by a U.S. government-sponsored enterprise or a U.S. government agency are among the company's investments. Agnc has an $82 billion investment portfolio, the majority of which is made up of 30-year and 15-year fixed mortgage-backed securities. Agnc has a dividend yield of 11.54% and pays a monthly dividend of 12 cents per share as of the recording. Another mortgage REIT that invests in residential mortgage-backed securities is Armor Residential REIT. The securities portfolio of the company includes mostly of securities issued or guaranteed by United States government-sponsored entities and the Government National Mortgage Administration, which are backed by fixed rate, hybrid adjustable rate, and adjustable rate home loans. According to their website, Armor's investment portfolio is nearly entirely made up of agency securities, which is a positive thing. But this is a company that has been in financial trouble for years, with massive revenue losses in the last 3 years. While it currently pays a dividend yield of 15.08%, it has a history of decreasing it. So hopefully, brighter days are ahead for this organization in the future. Grupo Aval Acciones y Valores supplies public and private sector organizations in Colombia and Central America with a variety of financial services and products. Checking and savings accounts, cashier checks, and collection services are among the deposit products and services offered by the organization. They have a global workforce of about 70,000 workers and are headquartered in Colombia. Since 2014, Their stocks has traded on the New York Stock Exchange. In Colombia, they run 4 main bank segments and provide loan services to a variety of nations, including El Salvador, Nicaragua, and Honduras. Their stock currently yields 5.73% and provides a monthly dividend of about 2 cents per share. Banco Bradesco is a diverse Brazilian bank that offers a wide range of financial products and services to individuals, organizations, and businesses in Brazil and around the world. Banco offers savings accounts, mutual funds, and a variety of loans and advances, such as overdrafts, credit cards, and installment loans. They are one of Latin America's major financial conglomerates, with $319 billion in assets and 31.4 million customers worldwide. They were started in 1943 and had developed tremendously in terms of the numbers of services they provided since then. Their stock is traded on the New York Stock Exchange and now yields 0.67% in dividends. Broadmark Realty Capital provides a short-term first deed of trust loans backed by real estate to finance the purchase, renovation, rehabilitation, or development of residential or commercial properties across the United States. Since 2019, the company, which is structured as a mortgage REIT, has been traded on the New York Stock Exchange. Broadmark has invested over $2.8 billion since its founding in 2010 and now has $1.3 billion in active loan portfolio, according to its most recent investor presentation. Every loan is secured by elders, which is believed to be safer than unsecured loans. Since 2014, they have been steadily increasing their lending portfolio. Their stock now pays a monthly dividend of 7 cents per share and has a dividend yield of 9.86%. In the United States, the Crosstimbers Royalty Trust functions as an explicit trust. It owns a 90% net profits interest in several producing and non-producing royalty and overriding royalty interest properties in Texas, Oklahoma, and New Mexico, as well as a 75% net profit working interest in 4 Texas properties and 3 Oklahoma properties. The Crosstimbers Royalty Trust was established in 1991 and is situated in Dallas, Texas. Several of their companies on the list are formed as royalty trusts, including Crosstimbers. One thing to keep in mind is that the amount of dividends a royalty trust delivers to stockholders is highly dependent on the performance of the oil market. As you can see, the amount of dividends you'd receive each month fluctuates a lot, which is something to keep in mind if you're hoping for a steady monthly income. Dream Office Real Estate Investment Trust is an REIT based in Canada that trades on the US over-the-counter marketplaces. They own and run a portfolio of high-end office buildings in Calgary, Saskatchewan, and other parts of Canada. According to their website, they have 480 hotels across the United States, Canada, and Europe as of the time this video was made. As you might expect, the office REIT sector hasn't been performing well recently due to the pandemic. Another thing to keep in mind is that the stock is very thinly traded. So if you're interested in this company, be cautious about buying too many shares. Currently, the stock has a dividend yield of 3.6%. Another Canadian REIT that trades over the counter is Dream Industrial Real Estate Investment Trust. The same Canadian corporation Dream owns this one as well. Dream Industrial owns and manages a diverse portfolio of high-quality industrial properties throughout Canada, the United States, and Europe. According to their website, they presently have 239 industrial assets with a total investment portfolio value of over $5.7 billion, making them a far larger REIT than Dream Office. They also have a commitment rate of 98.2%, which is rather excellent. The stock is still thinly traded, similar to Dream Office, which is something to keep in mind, and it currently yields 4.47% in dividends. Ellington Financial is a financial asset management company based in the United States that acquires and manages mortgage-related, consumer-related, corporate-related, and other financial assets. Among other things, the company buys and manages residential mortgage-backed securities and offers collateralized loan obligations, mortgage-related and non-mortgage-related derivatives, corporate loans, and equity instruments. Ellington Financial has over $13.3 billion in assets under management as of 2021, with a focus on high-yielding short-term loans. Their stock currently yields 10.03% and pays a monthly dividend of 15 cents. During the pandemic, their payout was reduced, but it has since rebounded. Exchange Income Corporation is a Canadian aerospace firm that trades on the US over-the-counter market. The business is divided into two segments: aerospace and aviation and manufacturing. Their aerospace division provides rural areas across Canada with aircraft and charter services, as well as emergency medical transports. Their manufacturing division creates window wall systems that are used in a range of construction projects. This company stands out on this list from others, as you're undoubtedly aware. The vast majority of these companies are either financial or real estate connected, as you're probably aware. Unfortunately, it is a pretty lightly traded stock, so keep that in mind if you're thinking about investing. When a company is thinly traded, it can be difficult to sell all of your shares fast if you need to. The stock presently yields 5.4% in dividends. Epr Properties is a specialist REIT that bills itself as a real estate experience company. That is to say, Epr Properties invest in properties that supply consumers with entertainment. So among other things, they own top golf driving ranges, movie theaters, ski resorts, a casino, and hotels with indoor water parks. They also put money into private schools and early childhood education centers. This company was hit hard by the pandemic, and they have stopped paying dividends for over a year. However, as of July 2021, they're back to paying dividends monthly. They did reduce monthly payments to 28 cents per share, which is now the rate. It does have a 6.18% dividend yield. Gladstone Investment is a business development firm that specializes on buying mature, lower middle market firms with revenues of $20 million to $100 million, excellent fundamentals, and competent management teams. Gain typically provides the majority, if not all, of the equity and debt capital required to close a transaction, working alongside both management teams and independent sponsors. Gain Investment is a private equity firm that invests in manufacturing, consumer goods, and business services companies. This is a considerably smaller BDC when compared to others, and preferred and common equity account for 24% of their investment portfolio, which surprised me, because most BDCs I've encountered only dedicate about 5% of their investment portfolio to this type of equity. Not that this is a terrible thing. Gain has a good track record so far. It's simply that it's deemed less secure than senior secured or senior second secured debt. And with that, the first segment of this video comes to an end. If you haven't already, hit the like button below to show your love and support for this video. Also, subscribe to the channel and click the notification bell to be the first to know when a new video like this is released. Thank you for stopping by to watch, and we hope you had a great time. And we hope to see you again soon.